Blog Talk Radio.
Good morning from Orange County, California, where it's a sunny winter day, and I'm Brian Dooley, CPA, with this episode of Tax Talk. This is the second part of the Tax Talk on saving taxes by printing your private money. If you have not played the first part, I suggest that you go to the Blog Talk Radio or my website or my blog to find the episode. It provides the basics. This episode will get into some sophisticated items, and I will be assisted by my virtual assistant, Rob the Robot. And Rob, how are you?
Brian, I am feeling fine. Thank you.
That is really good. Okay, so let's get into some of the ideas here. Now, we get into the provocative tax planning aspects of private money, and this is the related party private money. You need your real money to pay unrelated parties, such as your employees, payroll, rent, inventory. You want to use your private money to pay your related companies' income shifting and expense shifting. So, for example, if you have a company that's maybe manufacturing or a wholesaler or even a restaurant, you would elect the accrual basis, which means you get to deduct expenses incurred but unpaid by the year end. When the expenses to a related party, you need to pay the expense shortly after the year end. You can pay it in the same year, but you also have a grace period after the year end. Payment for tax law means the transfer of money or property to the other person. What's nice about your private money is you can use it again and again for other related party transactions. Much like America's Federal Reserve, you want to create your own private reserve. The best entity is the single member LLC. The owner of the LLC is not liable for its debts. It's just like a corporation. The shareholder or the member is not liable for the debts of the company. The IRS states that a limited liability company does not exist for tax law. It files no tax return. It is completely stealth. Once you have your company form, you can print your private money. If you go to my show notes, you'll see a link to my blog with some examples of private money. The Disney private money, a banknote, which is, as we discussed, is a type of private money. Oh, sorry. Before you print the money, you have to decide what currency or commodity you want your money to be redeemable in. For example, Disney has their private money redeemable in products or services. A gift card, which is a type of a private money, is also redeemable by stores in products or services. Sometimes you can get your change back in US dollars, and sometimes you cannot. Your private money can also be redeemable in gold or silver or Swiss francs or the US dollars, or much like the Federal Reserve, it's redeemable in just more money. That's right. If you go to the Federal Reserve and you want to trade in your $100 bill, all they're going to give you is a new $100 bill. Now, in my case, my LLC money is redeemable in more LLC money.
Brian, sorry to interrupt, but what is the denomination? For example, Disney private money is denominated in the United States dollars. Would you recommend dollars or a foreign currency such as the Swiss franc? Since you are using the money to pay expenses in the United States, would you recommend the United States dollars as the denomination?
Now, back to tax planning. During the Great Recession, many wealthy businesses obtained huge tax refunds without using their real money. This is how it worked. A business loss in the current year allows you to obtain a refund of the prior 3 years' taxes. This is called a net operating loss carryback. Now, remembering that related parties' expenses have to be paid in cash or property, this would have you want to preserve your liquidity for those real expenses, those expenses that if you don't pay can actually put you out of business. So businesses use their private money to shift income and expenses between the companies that would get the best loss carryback. Now back to my LLC. You see, I'm cash poor, but I'm also land rich. I have some desert land in Nevada, which is my favorite state, to form a limited liability company. The land cost me $1,000, but it's worth $100,000. I transfer the land to my Nevada LLC. This is tax-free because the IRS states that a single member LLC does not exist for tax law. Well, now each LLC dollar is worth $100. Assume I only printed $100,000 worth. I use my private money to pay my related party expenses, to shift income, or to create deductions, whichever would allow me to save the most taxes. Now, Rob, back to your question, I want to kind of give this background first. The denomination for domestic U.S. planning should be in U.S. dollars. It's going to make the tax accounting a lot easier. Of course, you want this concept to be really accepted if there's a tax audit. Exchange rates or value of gold, exchange rate for foreign currencies and value of gold can change so much throughout the year that it becomes a real difficult, difficult tax accounting, and it could make the auditor feel angry because he can't understand it, and plus your CPA would probably not enjoy it. Now, I see one of the most powerful uses of private money is for the business that is required to use the accrual basis of income tax accounting. So as some of you know, we have two types of accounting rules. We have a cash basis, and that's usually used by service businesses that are paid at the time of services or do not carry inventories. For example, a law firm, a CPA firm can be cash basis. An insurance company or financial planner can be cash basis because they sell a service, they don't sell property. Many firms have to be accrual basis. That would be a manufacturer, a wholesaler, a distributor, anybody in the construction industry. Those type of firms have to be accrual basis. Quite often, great tax planning is having two companies, one that's in the accrual basis and one that is allowed to use the cash basis. There's also tax accounting methods that are in between the two. As we talked about in episode 1, if you sell your private money, maybe in the form of a gift card or a coupon, the money you receive is not taxable when you receive it. And with great bookkeeping, great tax accounting, and by making the proper election on your tax return, that deferral can last for decades. The Disney private money is a good example. When people purchase the Disney private money, they pay for it with real dollars. Disney does not pay any income tax. Disney's tax is deferred until somebody actually shows up at the amusement park and spends those private dollars. If the person loses those private dollars, that tax deferral will go on for a long time. So for the related party private money, the accrual basis taxpayer has to report income on the value of his accounts receivable. The value is considered to be the face amount. may be a little bit unfair because during the Great Recession, we know a lot of those accounts receivables were not going to get paid, or were going to get paid so far after the date of sale that liquidity-wise they had little value. So to solve that problem, what wealthy businesses did during the Great Recession, and keep in mind they want to get a net loss carryback to refund the prior 3 years' taxes. So they want to, in their main company, the one that say has the accrual basis, the manufacturer or distributor or wholesaler, they want to have either no income, that's pretty good, but a loss is even better. That loss will refund the taxes for the prior 3 years paid to the IRS. So they would factor their accounts receivable. Now, usually factoring is done to a unrelated party. They're in the business. They give you cash for your receivable. Sometimes they take the complete risk. Sometimes you guarantee it. But we're going to talk about factoring when somebody takes the complete risk. And they take a big discount, 20, 30%, based upon your aging of your receivables, a lot of factors. So in this example, we're going to say the discount was 25%. You are at your year end, you're getting close to it. Your accounts receivable is $200,000. Your profit on those accounts receivables may only be 20% if you're a distributor. And so if you can sell those accounts receivables for only $150,000, you're going to get yourself into a great position, either no taxable income or a loss. You don't want to be selling it to your related party for money because during the Great Recession, liquidity in money was very precious, as it still is for most people. So your Nevada LLC purchases your receivable for the private money. It purchases the $200,000 worth of receivables for $150,000 of private money. Your income now has dropped from $200,000 for the year-end receivables to $150,000. Meanwhile, back in Nevada, when those customers pay off the LLC will have income in excess of what it paid for the receivables. But Nevada is a tax-free state. So if you're in California, like I am, or New York, like many of our listeners are, you just removed a lot of income from a high-tax state. And for many of my clients, state income tax planning is as important as federal because the alternative tax, the U.S. alternative tax, really hits people hard in states like California and New York. So that's one of the most effective ways. There's other things. Quite often a company will have a related company that's on a cash basis that does marketing work, promotional work, advertising, maybe even doing the sales work. And that can be done on a cash basis. Now, Rob, could you kind of help us out with the Bitcoins before we sign off?
Brian, before we sign off, you mentioned the private virtual money called the Bitcoin. I love Bitcoins because they exist only in my world, which is the virtual invisible world. Unlike most currencies, the Bitcoin does not rely on a government. Instead, Bitcoins uses a transaction log across a computer network to record transactions, verify them, and prevent double spending. Internationally, Bitcoins are exchanged by a personal computer directly through a wallet file or a website without an intermediate financial institution. But they can also be exchanged through physical banknotes, which, as you mentioned, is the original private money. 1 Bitcoin is worth $22. Bitcoins have a circulation value of more than $250 million. They are used by multinational companies for advanced tax planning.
Thanks, Rob. And for those of you who want to get more information about the Bitcoins, please give me a call, or on private money, of course, in factoring. I'm Brian Dooley, CPA. My phone number is 949-939-3414. This is a great topic, and if you're playing this blog talk, pass it on to your CPA and ask him to give me a call.